Why trade index futures? Index futures trade in a 24-hour market. That enables you to evaluate the pre-market bias ahead of the regular session open that can give you a huge edge on directional strength at market open. They have huge volume that promotes higher probability trading results using technical analysis. The liquidity brought about through strong volume results in consistently tight bid-ask spreads for expeditious and economical entries and exits. Characteristically, they have wide average daily ranges to trade from. My primary reason for moving into index futures was simply to expand my universe of play. Have you ever sat in front of your trading station through a day where your price action stayed flat in narrow range action most of the session, or worse yet, the entire day, then see another day, 2 or 3 the same way? Welcome to summer trading in July. These conditions can last where you start to get worried about making your daily, weekly, or monthly income goals. You might start taking weak trade setups because that's all you're finding in the only market you're tracking, and forcing trades you wouldn't ordinarily take in better trading conditions. It happens to the best of us. If you watch more markets, you'll have a better chance of finding one that has better conditions to trade in than only 1 or 2. You'll therefore increase your odds of success by picking the strongest area of play to trade in. There are 4 major indices we track. We play mini contracts no matter which of the 4 major indices we choose due to the higher liquidity and affordability. Technical traders go with the volume, and the volume is in the mini contracts. Of the 4 major futures contracts available to trade, all have particular attributes. You'll hear other analysts state one might be better than the other for a number of reasons. If I was trading for a hobby or fun, I'd probably stick to the ES and the NQ, as we typically see more trading opportunities there than in the YM and the Mini Russell TF. But I'm not trading for fun. I'm a professional trader that has traded the markets for over 20 years. I trade for a living. I know tradable signals will show themselves in all 4 major index futures. They are easy to track as there are only 4 of them, so I suggest you trade them all. The ES is a CME S&P 500 mini index futures contract. It's got 4 ticks per point at $12.50 per tick, or $50 per point. The average true range currently is around 14 points. The NQ, a CME NASDAQ 100 mini index futures contract, has got 4 ticks per point, or $5 per tick, or $20 per point. The average true range on the NQs is currently running around 30 points. The YM, a CBOT Dow Jones Mini Index Futures contract, has got 1 tick per point, $5 per tick, $5 per point. The average true range currently on the Mini Dow is running around 110 points. The Mini Russell 2000, the TF, is an ACE Russell 2000 Mini Index Futures contract. It has 10 ticks per point, $10 per tick, or $100 per point. The average true range on the Mini Russell is currently running around 10 points. Guys, the index futures are a great trading vehicle to expand into or start your trading career with. Look for my next TradeSight educational short on pre-market preparation in index futures play. Until then, this is Mark Lycos at TradeSight bidding you good trading.